Hey guys, what is up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla stock. Let's go over the market. Let's talk about what is happening today with Tesla stock, what we can expect moving into next week and potentially the rest of the month and all that good stuff. If you enjoyed, don't forget to hit that like button. This is not financial advice and I am not a financial advisor. And of course, if you enjoy my technical analysis, thoughts on the charts, updates, etc. Well, again, I do share my thoughts with my members every single day as the market is open. Definitely check that out. That link, of course, is down below where I'm constantly sharing these posts, updates, etc. For just $3 a month. That's the first tier. All my Tesla updates, just $3 a month. That's all it is. $5, of course, includes NVDA as well. If you're interested in NVDA updates on top of Tesla. Or for $7 a month, you get everything together, which obviously includes the first two tiers, plus non-Tesla and non-NVIDIA stocks and charts that I share as well with members when, I see a nice opportunity. And of course, on the weekend, which, was coming up right now, this Sunday, I do chart requests with members over on Discord. But jumping into a Tesla with a pretty, respectable day, we'll say today, up about 2.3% compared to the market, arguably maybe a slight outperformance, right? But, looking pretty decent, closing just shy of $230 per share. Pretty key level, right? But there's a lot to go over. So let's start off with the daily. There's a lot to talk about on the daily here. So there's a few things that I want to point out that is very, very important. So the first thing I want to point out is the fact that there's two trend lines here. Now, again, sometimes the issue with trend lines is they can be somewhat subjective. And what do I mean by that? Well, we have two trend lines here, right? Is this the right trend line? In that case, we seem to have broken out. Great. Or is this the right trend line? Then we haven't really broken out, or we actually got stopped at it almost to perfection right at that trend line. Or do you zoom out over here and you go out, for this trend line from all-time highs, and you go like this and you kind of attach it like that, and kind of also shows that we broke out, right? Kind of like this, right? So it's kind of like, which one is the right one? That's kind of why trend lines can be pretty subjective. And this is why for the longest time, this is the one I had for the longest time. I did recently switch it to this one, right? This more aggressive one. But the reason I had this one for the longest time, and honestly, maybe I should have stuck to it, is I personally, when I like to draw trend lines, I like to touch them at the upper wicks, right? Now, you can argue the fact that this trend line here, it's not invalid because you don't actually invalidating any wick or any candle because no candle actually closed above it, well, until technically this one just now, of course. But I personally like to, go from like wick to wick because because if you can break this trend line, the one that's on the screen right now, that to me is much higher conviction, much higher strength. If you break this one, then I'm like, it's gotta be a good breakout. Like there's no way, because if you do the other ones that are a little bit like this, they're less lenient. You can get more false breakouts, false movements, etc. Like up here as well, for instance. So I like these ones more. Just again, small little, I guess, example. So in other words, we got rejected right at it, right? We got rejected right at it. Now, the good news is the fact that we did break this high over here at about 330.4, which is good despite closing below it, which could be better for sure. We still broke above it. Now, there's a few things to look out for, right? Now, the first and foremost is the fact that, well, there's arguments to be made. Well, are we kind of seeing what the bears saw here last week, but now with the bulls? Same kind of idea. We broke a key level, which in this case was about 300, went down below it temporarily, but then we got sucked back up and we closed back above 300 and reversed. Is the same thing about to happen here, but in the reverse. Well, we also had this, kind of 330.4-ish level. We broke above it, but then we still closed below it. Now do we reverse, right? Well, let's talk about that, right? That's going to be the first thing to watch out for. Is this just the exact same scenario that the bears got trapped in, but flipped? That's the first potential thing to watch out for. Now, the fact that the EMAs are back to fully being bullish and the MACD is not only making higher lows, but it actually flipped to green is a good sign, right? That is a good sign in my opinion, but also take into account the fact that we're still technically within this pennant, technically still chopping. Momentum indicators like this aren't as effective. What's more effective in these kind of situations are indicators like the SMI down here. For instance, if I go to the 4-hour, you can see every time the SMI has reached the upper end of the spectrum, we've reversed almost every single time, and we're pretty much there right now. So there is major resistance here. So in other words, what do the bulls want to do? What do the bulls need to do, in my opinion, to break out? Well, obviously, they pretty much now need to break today's high, right? Today's high is really, really important for a multitude of reasons. First and foremost, well, that's obviously going to actually break out of this final trend line that, again, in my opinion, if we break and close above this trend line, it's looking pretty good for the bulls. So that's going to be important. But also this high up here is pretty important. The reason this high is important is because if I go to the monthly time frame, right? Don't forget, remember in the monthly time frame, we're printing many, many inside monthly candles in a row. All started back from this May candle here. And then of course we went to June, completely contained within May. July, completely contained within June. And now August, so far, completely contained within July. Like we're getting, the compression, especially in a monthly time frame, it's not, you don't see this very often. It's getting very fierce. It's getting very, 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 very compressed, right? Very compressed. So that high that I mentioned, about 338, is also the high of this candle here, the monthly candle, last month's candle. Very important to break, at least in my opinion. So I'm going to be watching for that moving forward. And that's going to be this high right here, this one right here. Bam. Oops. This one here, right? That's what I'll be watching for personally. So we'll continue monitoring it. We'll continue to see what it develops into and all that good stuff. But this is the overall perspective. And this is kind of overall what I am personally looking for right now. Break above that and there's going to be very little arguments to be made from a bearish perspective. However, below this and below this, still below this pennant, we can easily still retrace technically back down to the opposite end of the spectrum until we finally get a break above or below. More confirmed. Let's go to the 1 hour time frame. 1 hour time frame. This is what I'm expecting potentially short term. Now, as long as Tesla essentially remains pretty much below like the very, 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 very low 330s, what I can potentially see happening is, well, kind of like a bull flag being formed on the 1 hour time frame where we had a nice little move up here, a little bit of a bull flag, moved up here, a little bit of a bull flag. But again, bull flags can be like this or they can be like this. So I'm expecting something like that. So in other words, it'll be something like this, move to the downside, back into the EMAs on the daily, back into this old resistance, potentially new support closer to 320. That'll be a nice looking bull flag. And as long as that holds, we can actually use this momentum to essentially finally get, pushed essentially through that resistance zone in the kind of mid-ish, if you will, 330s and that pennant and whatnot, right? That'll be kind of what I'm looking for. So if I go back to the daily, if I take the Fibonacci's from here, from this swing low, all the way to this swing high, because, we still technically broke this high at 330.4, which is good. Now, kind of what I was doing for the bears up, well, technically for the bulls now, the opposite is true as well, where now any retracement from here, I'll actually look at as a potential bullish retracement back into those Fibonacci's, which again, pretty much will print that more or less bull flag, at least in the 1 hour time frame. If it takes very, very long, maybe we'll get it on the daily as well. But in other words, the price will come back into the exponential moving averages. The 382 Fibonacci is pretty much sitting right dead smack at 320/321. And that'll be my first main target to the downside if we don't essentially, early Monday or Tuesday or whatever, essentially break back above this pennant. So again, essentially below today's high, this is kind of what I expect right now heading into early next week. Bit of an hourly bull flag set up into the EMAs, into the daily EMAs and exponential and Fibonacci levels. And from there, as long as that holds, the ideal scenario, well, 320 holds and we make our way higher. Now, if we get a deeper retracement, then that can potentially bring us all the way down back to about 312, which is roughly, sometime, in about a week and a half, right into that 618 Fibonacci, which is sitting in the 312s, right? And that's going to be lined up almost perfectly with the bottom end of the pennant. This will be the more deeper retracement, but technically speaking, this could still be a much, much larger bull flag, something like this. That's kind of what I'm looking for right now. One of these two scenarios, right? Again, nobody knows how it's going to play out. Nobody knows what's going to happen for sure. But these are kind of the rough areas that I'm looking for right now in terms of what I expect moving into, potentially as early as next week, maybe even the week after. Just depends on how long it takes. Nobody knows. So let's continue monitoring that. But in other words, again, if you really want to make it as simple as possible, just put a trend line above today's high, put a trend line or just a horizontal line below this low down here at August. What is it? The 1st of August, I think it was, right? Yeah, the 1st of August. Break below this, bearish. Break above this, probably bullish. Very high chances bullish. And that's pretty much all it takes right now. So let's continue monitoring. But below this and above this one down here, we can still get some more chop. Ideally, we get some kind of nice looking bullish pattern. Because again, every time I try looking for a bullish pattern, it either happens very, very aggressively and it's just very ugly, or we just get a massive gap down like we had on earnings. And there's just no chance for anything to really develop within this pennant to give me a better idea as to which way we want to actually break out. So the best case scenario for me is a fairly slow-ish sell-off back into the exponential moving averages, set up a bull flag and head higher. Roughly. That's kind of what I would like to see. And that will give me more confidence in the more bullish perspective. But again, to me right now, pretty much above today's high or August 1st low will be the main rough-ish level to watch out for bullish and bearish moves respectively. I think that's pretty much it. Looking at the weekly here really quickly, the weekly is not giving us too much information, to be honest, right? kind of doing its thing, nothing really too crazy. Monthly, we already talked about it. We're still contained completely within last month's price action. So again, that's also another way to look at it, right? Same idea, except this one's a bit of a bigger range. There's a lot of perspectives, there's a lot of ways to look at it, right? You can also do the monthly candles, put a trend line essentially below last month's low, which is about 290 versus last month's high, about 338, like I just said. Also, same idea, right? Break above or below those levels, you most likely move in that respective direction. There's different levels to work for. Obviously, different levels have their own risk tolerance, risk levels. Some have higher degree of confidence than others. It really just depends on your personal risk tolerance. But those are roughly the main key levels to the upside and to the downside to look out for a break to happen and for a stronger move to come from it. Because again, the stock is extremely compressed. Look at Apple, right? Apple was very compressed for very long, and Tesla is arguably equally compressed. So once Tesla breaks out, up or down, it should get a move similar to Apple like this. Again, now that the EMAs are bullish and the daily MACD is bullish, naturally speaking, I slightly lean bullish again. But again, same like I said down here where I was slightly leaning bearish, it doesn't mean it's full on bearish. Neither does this up here mean it's full on bullish. We need to get an actual clean breakout, or else everything in this zone is just going to continue being chop. And these indicators like the EMAs and the MACD, well, they're obviously not very useful when it comes to chop. But, obviously once we get that breakout or down, that's when they start becoming very potent. As of right now, mediocre. So anyways, hopefully that all makes sense. Options flow, take a quick look. Throughout the day, the bulls definitely overwhelmed the bears for sure. No question about it, especially in the morning. Very bullish flow in the morning as the stock was pumping, but as we started selling off, the bearishness started to slowly seep in. Still overall more bullish and bearish, but towards the last hour or two of the day, pretty mixed to be completely honest with you. Maybe slightly bullish leaning, but honestly, it was pretty mixed. With the 2.4 million though, call came in 325 strike September 19th, which is the only thing that really stood out to me in bullish fashion. Otherwise, slightly bullish, but somewhat mixed into next week, for instance here. So let's continue monitoring. We're getting close, not there just yet. Today was a bit of a false flag. Not there just yet, but again, we're getting closer and closer. Anyways, thanks for watching. See you Monday. Peace.